GameStop over and over and over, that causes actually market makers, dealers, brokers, and other financial firms to have to buy GameStop stock itself and drive up the price, which squeezes the short sellers because the short sellers have to ultimately deliver physical stock in GameStop. So that's what's causing the price to go up. These hedge funds that were shorting GameStop fucked up. They got lazy and they got complacent because they were making a lot of money shorting and trading GameStop stock for a while. They have their own little corner of the universe because GameStop is, let's be honest, a tiny company. Then Wall Street Bets and his buddies from Reddit came in and bought all the call options and squeezed these shorts, and now they're complaining because like Citadel got involved in the action, bailing out Melvin, one of the hedge funds that's vilified for shorting GameStop stock. GameStop is also popular among Reddit kids because Michael Burry, who is famous for shorting the housing market through buying credit default swaps and shorting the CDO market and so forth, and basically calling the housing crisis, predicting the housing crisis and taking a big bet and making a lot of money off of it. And he's in the movie The Big Short. He, played by Christian Bale, he is long GameStop stock because this stupid Blockbuster video game company that I think is pretty worthless is supposedly going to make an awesome transition to esports, which I don't think will work. But, it's a free market. I don't really care if people buy it. Now what's happening is TD Ameritrade has clamped down on trading in GameStop and maybe some other stocks similarly that the Wall Street kids like. And Robinhood especially has done the same. And FYI, Citadel, this giant hedge fund that frankly is, if any hedge fund is too big to fail, they're probably in the top 5 hedge funds of too big to fail hedge funds, which sounds ridiculous, but I know that Long-Term Capital, which at one point was a giant hedge fund, they were bailed out by Wall Street because Tim Geithner, who was the New York Fed chair at the time, made Wall Street get together and meet at the New York Fed, and he basically told them to bail out Long-Term Capital, wanted private banks to bail out this hedge fund that they had given a lot of leverage to. Anyway, so bottom line, Citadel gives 40% of revenue that Robinhood makes is from your data. If you're a Robinhood customer or investor, your data is being sold to Citadel so they can front run you and make fractions of a penny per trade. They front run you a little bit, and that's how they pay a lot of money to Robinhood to get the order flow from and your data. So basically Citadel, which is short, basically effectively GameStop and all these others, and maybe possibly others, and bailing out Melvin Capital, this hedge fund that was super short. Robinhood basically bent the knee to Citadel. They didn't have to, right? Legally, they can do whatever they want up to a point as long as it's legal. But they bent the knee because Citadel put so much pressure on them and is 40% of the revenue. In the case of TD Ameritrade, that pressure was more from, for example, the Melvin and Citadel and other short sellers. These people had personal trading accounts at TD Ameritrade, but they had like hundreds of millions of dollars in them or tens of millions of dollars and generated a lot of revenue for TD Ameritrade. They forced TD Ameritrade to, not force, but apply pressure, and TD Ameritrade bent the knee to these VIP customers and also suspended trading on Robinhood, on GameStop. So that's where we're at. And
can you expand on
views. One of my trader friends was very smart. We can actually try to. Do you mind trying to ping him? So yeah, it's this guy E. I'm going to try to ping him in. He's been in a group chat with me, small group chat of like 4 people, where he's saying. So none of this is advice, trading, investment, or otherwise. If you lose money, you're a grown-ass adult. You're pretty privileged to be one of 2 million people to have a clubhouse invite, and an iPhone. So screw you, right? But I will tell you that he did say maybe don't sell until Friday when the options expire and supposedly the shorts will be squeezed and the price will go way up, and then maybe you sell at that time. However, I have another friend who basically said at this point, and his name's Ashwin Murali. He's a great guy. You should follow him. But he said that his friend said that maybe you should, that the upside's limited to 2 to 4x or something like that, and the downside is you're totally exposed on the downside. Look what's happening with Bed Bath, right? It's down like 40% about from yesterday, and some of these other stocks, they're all down because so contrary to what some people are saying, that Robinhood screwing over the little guy, these Wall Street kids, and the rest of us by suspending trading in GameStop, that's going to cause people to buy more GameStop stock and call options on other venues. That's actually not seeming to happen, right? Same thing with TD Ameritrade. Everybody hates Robinhood and TD Ameritrade, and there are other things happening, and Nasdaq announcing that they can suspend trading based on social media and whatever else they've announced. So bottom line, this is a situation where it's unclear what will pan out, but I do think that the risk-adjusted reward ratio has gone way down. But meaning the risk has gone way up and the reward has gone way down. It still might be good, fun for you to trade in it. You can still make money, but it's very unclear compared to before, like when it looked like, wow, this is like a close to a no-lose situation.
Hey, while you're wrangling in your buddy to get in the room, can you also collect your thoughts and recap the business model, which I think is staggering insight, where, of course, show me the incentives and I'll show you the behavior quote. Can you expand and recap for the new people in this room on the specific business model that Robinhood has and the specific peer pressure, monetary pressure that TD Ameritrade exerted?
Yeah, Robinhood is glorified Facebook, but for stock trading, where you the user are the product. You the customer. You're a Robinhood investor. You're a customer of Robinhood. They should give you good customer service, but you're really the product. And the reason I say that is because 40% of their revenue comes from Robinhood's revenue comes from Citadel, because they're taking your data and selling it. Citadel wants what? Citadel's what? They're a giant hedge fund trading firm, and they have very sophisticated algorithms and very fast computers and really smart people, and they're picking you off. Meaning, when you buy GameStop, they're buying a little GameStop ahead of you and then selling it to you. So they're front running you, and the reason they're able to do that is because Robinhood legally, albeit it's horribly unethical, but legally they are doing this, and that's why they're still in business, I think. So when you sign the terms and conditions or terms of service or whatever you signed, when you clicked a couple buttons and did this auto signature or whatever to become a Robinhood customer, you agreed to all that, and you agreed to that Robinhood could do certain things to certain stocks if the market was out of whack or whatever the term said, and this is all stuff that their lawyers stuffed into the terms of service and the legal agreement that you ended up agreeing to.
Remember, I was going to add on that. I think it's kind of ironic because front running is technically illegal, and what you have is an entire company that's about the IPO, and the entire business premise is to front run orders and to make a profit off front running orders. And the name of the company is called Robinhood. It's actually quite ironic.
Yeah, that's a good point. I guess there's different types of front running and this type is somehow legal. It's kind of like inside information. Not all inside information is illegal. It depends on if it's material, non-public, and all that stuff. Like if I get information from one of you for about an investor doing something in an asset I like, and that causes me to buy a little bit ahead of others, then that's not illegal, right? Because I'm just getting the press release a little bit sooner. It's already public. It's just maybe I get the information a little faster than you.
Remember, I also asked you about the TD Ameritrade and how how it's a broker's personal account, and then the monetary pressure for that.
Oh, sorry, didn't quite catch that.
Remember, I also asked about the TD Ameritrade, where PE DBs, douchebags, where they trade at, and then how is that how they applied pressure to try to close out trading.
Oh, yeah. So I think the TD Ameritrade is different from Robinhood. What's going on with TD Ameritrade? TD Ameritrade has a lot of whales and rich people, very rich people from finance who trade on it for their personal account, family office, whatever, right? So what happened, we think, in TD Ameritrade is that people who worked at Citadel, Melvin, and others who just didn't like what was going on called up TD Ameritrade, said, hey, we're VIP accounts. We generate a lot of money for you because we trade a lot. We use leverage, and we do it in size. We do it in huge dollar amounts, right? So we're going to fire you and take our business elsewhere unless you stop these Wall Street kids and others from trading that GameStop.
So what's been super useful in the almost over 2 hours, this used to be a private room, and then it became a social room that Terrence organized by initially inviting in Ashwin. But what's been super useful about this room, where I encourage you guys to put pen to paper for this, is the patterns behind the information that gets released into general media. In fact, some of the people that have dropped out of the room have gone to specifically blog and write at major news outlets. And the reason that this is useful is that this room is called, Actionable Wall Street Bets, and nothing is financial advice, but this is all information for you guys to audit and due diligence and investigate and research. When people say, hey, do your research, this is what this is leveraging the people that have been so kind as to contribute, where I'm furiously taking notes.
Yeah, my friend who is Chalmon's board member for Social Capital got pinged. He joined. I tried to pull him up, but he left. Unfortunately, I knew he was going to have
no problem.
When you say he,
that happened.
When you say he, who do you mean?
His name's Michael. He was in here, but he's Social Capital's board member, and I knew he was going to probably have some interesting things to say with Chalmon.
And it's great if you guys could cite and source the information that you provide. So Mike with a last name optional, but just citing and sourcing is a huge use. So that way, when you refer to Keith McCullough, actually, who's part of the new wall, taking the old wall to the cleaners, being able to cite and source at least like a Twitter handle or Keith McCullough or Buddy Carter would be hugely beneficial.
So, Emily and Shane, do you guys have positions on this stuff that you can share and what your thinking is, or Richard, Danae, Tim? I'll just tell you guys, I had a Nokia trade I thought I bought, did not go through, and then I also bought Bed Bath yesterday, dumped it at minus 17%, and rebought much lower because I'm thinking about the Friday thing, but it's not a big amount. It's just something I'm having fun with. Actually, from our earlier conversation, I'm more bullish on Tesla, so I'm just going back into Tesla. Yeah. But that's just me, not advice. May lose all value, blah, blah, blah.
Right. So I'll just recap. I'm sort of just experimenting because that's the way I learn things. And, I have a few $1,000s across some of these. I've consolidated. I started with Jimmy, and I got out at about 3 to 4x. I don't remember the number. And I have used that to sort of buy some of the broader Wall Street Bet stuff that I've since consolidated into Nokia and AMC, actually. And I'm down about 20% for the day on both of those. And I'm going to hold through Friday just again to see what happens. But I was in Bed Bath Beyond, and I sold out at about a 5% gain. I was in Fizz, and did about 23% gain on that.
Is Fizz SodaStream?
No, Fizz is I can't even think of the name.
It's okay. It's okay. All right.
It's a beverage company.
Yeah.
And
Carbonated.
Carbonated. And the reason I bought it was actually interesting because it was selling at over $100 a share, and I wanted to experiment a little bit with, sort of, will these kids buy something that's $100, right? And it was interesting. There was some pretty decent action on it a day and a half, 2 days ago, and then it sort of stalled out, but it held. And I just sold out of it because I wanted to move out of it and take my profit and then move into AMC where I could lose more money on.
Awesome.
But so that's been my strategy. It hasn't been sophisticated, and I've been watching the Reddit board. And like I said earlier, yesterday it became a shotgun approach, and it just diluted the power of the board, and it looks like now there's a lot of panic on the board, and we have to consolidate, blah, 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 and sort of nihilistic trading sentiment. Well, I started with nothing. I'll go back to nothing. So this is just sort of interesting to me.
Can you expand on what the board is for you?
Excuse me, Larry? I couldn't hear you.
Can you expand on what the board is for you?
Oh, the board? Yeah. My personal history is I did a few startups, and I, did okay, and in my mid-50s, and I'm sort of between things right now. And with COVID, I'm staying home. So, I may fit the profile a little bit of some of these people that are stuck at home. And so every morning I look at stock trends and things like that, and I'm not a trader by any stretch. And this just caught my imagination that, I'm typically reading and doing some meetings throughout the day, but I'm not super busy.
No. Expand on what you were specifically talking about with the board you said exactly the board losing focus, and you
Oh.
And so that's...
So, I apologize. Yes, so...
okay, we know it's about you.
Yeah, the Wall Street bets board was, if you just cycled through it and looked at what they were, and right now it's getting crashed. There's a lot of activity on it, but yesterday, if you just sort of sat on it and watched it for a few hours, you could see that, there were beginning to be all these other highly shorted stocks, and, they did their list this morning, and you could actually see action start to fragment. They lost focus from GME and started diluting the power of the group, frankly. And now there's this call on it to come back to these core stocks that they originally wanted to do, right? It's like GME and AMC are, back. Naked Brands, things like that. So I've just been watching that as a strange behavioral thing, and it's been really interesting. I've joked with some people about, doing pure sentiment analysis on Reddit boards and seeing what you could do with that in terms of investment strategies, but I'm not willing to work that hard. So it's
okay. And what's something actionable that you can give our audience and other speakers?
Well, the actionable stuff is actually, I think, this idea that they're going to pull back into their sort of, core thesis stocks, right? They're GME, I don't know if they're going to be able to do it with the throttling that I see going on, but AMC's, they're trying to keep propped up, and Nokia, they're trying to keep propped up. So that's what I've seen, and I haven't looked since I've been in this room, but that's what I had been seeing, yesterday and late last night.
To welcome the new people to the room, follow some of the moderators so that way we can check out your profile, and also raise your hand if you've got a specific question, because some of the knowledge bombs that have been dropped here have been so useful. And have you guys read or seen the movie version of the book, The Princes of the Yen, where princes of the end. Prince, not princess. The princes, like plural of boy prince. Princes of the end, where no longer conspiracy theorists talk about the strategy to suck assets, to suck cash into markets so that strategic default occurs and assets are forfeited. I mean, this is a playbook, and that circles back to the topic of this room, actionable Wall Street bets, because I think a temporary cycling down is going to absolutely be a pause before it goes into the stratosphere, because you can't suppress volatility, as per Buddy Carter, as per Benoit Mandelbrot, the misbehavior of markets.
Yeah, to piggyback on that, and Terrence asked what our positions are, what my position is at least. So I was, just to kind of summarize, I was in a GameStop, then pulled some out, left some as just as part of the rebellion. And then I still have positions in AMC, BlackBerry, Nokia. It's mostly just play money. It's not like millions of dollars, but yeah, I think this whole scenario, to me, what's more interesting is like what will be the third order of magnitude coming out of this, right? I think there's going to be tremendous pressure on Reddit was driving all of this, right? And like these community threads, there was already push for regulation coming out of the election. Now it's they're just going to double down on that, I think. But overall on the stock market, I mean, I've been monitoring the Reddit kind of board, and I put together a little script yesterday that was running, and basically it's analyzing all the text that's being put on the board, and I'm basically pulling out what are the most popular stocks, right? And so the most popular ones are GME, AMC, BB, Nokia, also Naked, and I think one of them, like Virgin companies, the Virgin Galactic one, those were like the top mentioned companies, but in that order. So it goes GME, AMC, BB, Nokia. And now it's all just GameStop. Obviously because of all the panic, but nonetheless, I've left what I don't mind losing, just to kind of support the cause, because I'm pro decentralization. I think the whole notion of that the small guy is just some stupid guy that needs to be protected, needs to be lost, because with internet, we all have access to the world of the encyclopedia. Everyone can be educated. They don't need a Harvard degree anymore. And so I'm definitely pro decentralization. I think this maybe somebody will build something more decentralized, because it's not just Robinhood, it's all the other, because all of these startups like Robinhood and like Republic, there's a few other ones, they're all using the same back-end infrastructure, and it's not Robinhood that's preventing it. It's actually the parent company that's running this, that's preventing them from taking trades. So I don't know if there's going to be losses coming out of this, but there might be a call for creating something more decentralized.
I just wanted to add there are already lawsuits filed. They're popping up on Twitter right now.
Yeah, so the lawsuits won't really matter. I mean, we're really going to recover $10 million, get slapped on the SEC for $20 million. The losses for the hedge funds should be $5 to $10 billion. So you're trading off $30 million losses for $5 to $10 billion potential gains, peanuts, pennies, right? So yeah. As reference, like, you know, I've been on Wall Street Bets since probably almost a decade now. I think maybe 5,000, 6,000 people when I joined. So I've really seen the meteoric rise over the years, and it's a symbolic rise. It's not so much like a greedy, we're going to try to make money. The vast majority of Wall Street Bets, like I'd say 95% of the posts were what they deemed the loss porn. It's people blowing up their accounts. It's before GME, before Tesla, it was just all of these account things, just people blowing up their accounts, and it's kind of like the saying is like one of us is kind of like what they go by. And then so with Tesla was actually the first real true winner. It was like the first time I think retail really won over Wall Street. Keep in mind, when Tesla was rising, Melvin and every single institutional fund was piling in against them. Like, it was I've never seen like a media attack so coordinated, attacking one company. Like every 10 minutes on some news outlet was just talking crap about Tesla. I was shocked. I was like, this is like some serious funding. But the whole Wall Street Bets crew was like all aboard the train, you know. And they got it right. The retail was right for the first time, and then so they got a little more brazen, and they went after GME. And what's interesting about GME is that, you know, first I think I think a lot of people covered it, but fundamental market architecture problems. That the fact that you can short more shares than available, like I don't know how that can actually work. I get if you use derivatives, call options, put options, you know, more fancy derivatives, but you know, how can you short more shares than what is actually physically available, right? They're basically using fractional reserves, kind of like banking industry to a certain extent with shares, which I thought was crazy. Two, with GME, it represents, it's like a movement. It's more like, I don't want to say equivalent of the movement, but it represents a movement because most of the people participating, there's a good post about it, talking about them getting screwed or just watching their parents, a lot of these are younger kids, watching their parents getting screwed in '08, like the parents out of jobs, like borderline homeless. At the same time, you have all the major companies being bailed out, and that's actually exactly why the Robinhood kind of ideology is exactly why Bitcoin was born, came out of '08. This is exactly, it shares so many parallels. If you're in the early days of Bitcoin, you read the forums, these are the exact same crew of people, just a different generation apart. And so that's what really, I think, makes it interesting for me. For also, on terms of actionable insights, if you look at the Volkswagen squeeze of, I think, 2009, 2010, there was a massive coordinated attack before the squeeze happened. This happened exactly on Tesla, and you're seeing it today. They did this on Tesla, the exact same play on Tesla, where it disabled buying, and I believe even selling, but mostly opening positions on Tesla options and stock. I believe it's only Tesla options, but maybe stock as well, during Tesla's run up at the same time. Robinhood is the exact same thing. So this is not something that's really new. It's intentional, it's coordinated, and it's how they, you know, whenever, you know, retail wins, Wall Street runs over here and says, regulation, we need to, you know, make sure, you know, retail in the scheme pretending to, you know, protect retail. In the end, it's like, but when Wall Street loses, it's like, you know, bail us out, you know, and who bails us out? You know, taxpayers. So it's not something, I'm not surprised this is how it turned out to be. It's just like, you know, if you've seen this once, like, this is like the third or fourth time this has happened. It's not a surprise at all.
I agree with that. I just think that the difference in this situation now is that a lot of people, especially globally, because even when you think about the Occupy Wall Street movement, it was generally a more American and maybe British kind of phenomenon. It wasn't something that was like globally, but the fact that we've obviously, the world is essentially becoming flat, and you're having everybody having the ability to be able to trade stocks on different markets, and then seeing this coordinated attacks where to actually throttle people from being able to actually get into these stocks. I think that is raising the awareness. And what's actually interesting is, like, it's kind of funny. It's like a simulation, because right now, I think about 20 minutes ago, Ja Rule, of all people, put out a tweet which was saying that this is criminal. The hedge funds shouldn't be allowed to do this. People who are the restriction on trades are forcing people.
Ja Rule should never be able to speak on anything criminal.
I was just about to say that.
Yeah, he
I
can't
know.
speak, people.
This is what.
Hold on.
No, it
But
takes
this
a
is what-
criminal. It takes a criminal to expose a criminal.
Hold on.
Someone that
So
actually matters.
no. Hold on. I
That's
haven't
what people
finished.
that
Hold on.
matter.
I haven't finished. Hold on. I haven't finished. So I was just saying that in regards to that, you see that it's actually quite funny, given the fact that you're having so many different people talking about, like, just the blatant hypocrisy, because every single, essentially the corporate shields that are on there, CNBC, Bloomberg, every single argument that they've used with regards to collusion, like, that same argument can be used for idea dinners, where a few hedge fund managers go and sit down in a room and coordinate and pitch ideas on what stocks they want to get in. And we've seen how that happened with Bill Ackman when they took the other side of the short with Herbalife. The argument that people are not sophisticated in terms of knowing how to trade, but then again, that is faulty, because if you look onto Wall Street Bets, there is a plethora of people who some people have actually done real due diligence and have real fundamental analysis into, like, the the applications that they've done into looking at these companies, and then they try to argue that, oh well, it's momentum trading. But that's the funny thing about it, is that a lot of the hedge funds that are actually copying Renaissance management are doing momentum trading. All these quant funds are doing momentum trading. So you're just literally seeing all of the talking points that they have used have just fallen, because everything that they've put on us and told us, the ordinary retail investor, not to that they're there to protect them. These things that are equally applicable to the hedge funds, and they're not talking about regulating them. They're not talking about making more transparency in terms of declaring their shorts, or coming on CNBC or Bloomberg and telling them that they're going to do one thing and then doing something completely different. So I think that there is definitely an awareness that you're seeing from people about how corrupt the system is and how much regulatory capture there is.
This is actually the first thing I've seen that the left and right have agreed on. I just saw Talib and Ocasio-Cortez getting after Robinhood too, and I haven't seen much agreement from the left and right in quite some time.
Yeah, you saw Ben Shapiro agreeing with AOC, right? Probably the first time.
That's I know.
Yeah.
It's holy
Crazy.
shit, when they're on the same page, I'm really nervous.
Yeah, that was actually hysterical. I thought that was so funny that AOC was like, yo, this is dope, fuck Wall Street.
It's a bunch of people too. It's the whole crew. Talib tweeted on it too.
Can somebody explain this idea of shorting more stocks than physically exist? I apologize if that's a basic question.
Yeah, so, I think Richard touched upon it. It's essentially like fractional banking, right? So what essentially happens is when the short interest is above 100%, it means that there are more shares being shorted than that are actually in circulation. So short interest, I believe, is just when it's essentially a short position, and so I have the shares, right, and then I give it to someone else to short, or if someone is just holding the shares, I give it to someone else to short, right? Then they have the shares. Let's say it's a different broker, and they give it to someone else to short, right? So it's pretty much just going broker to broker based off one share that is held by one specific consumer.
And when you short sell at a lot of broker dealers, you sign a rehypothecation statement that tells them, hey, you guys are good to go, loan my securities out to other people.
Correct. The best way of explaining this is if you write code, it's called recursion, and that's pretty much the best way about thinking about it.
I guess I think I fundamentally understand it on a very basic level, but why is it? And you guys all may crack up at me, but why is this legal?
Because our government's
I think it's actually systematic. Terrence can probably speak to this way. Terrence, are you actually here, or are you just listening in? Because I think if you understand kind of the way that trades clear, there's these clearing houses, and if you think about it, I can't remember exactly the name of the organization, but technically they own all the stock on Nasdaq or various houses, right? And so and so if you understand, I think it was 96 when they updated it again, and sorry, I'm out of breath while at the gym. I'm probably gonna do a terrible job, so I hope Terrence will bail me out. But it has to do with some of the system, but I think a lot of it is the acceptability of fractional reserve banking that somewhat is tied into it. And so what kind of happens is you got all these brokers that kind of go through, and Drew was kind of hitting on it, do this clearinghouse. And this isn't the first time this has happened. I think there have been other stocks that this has happened to where, there have been real squeezes, and then there's 135 or 140%. And there's all these people trying to call and then, say they have these shares, and when they add it up, it's wait, there's 10% more than we actually have accounted for. But it has to do with more of the system of how things are cleared and how brokers go through this clearinghouse that have there's a float in between it. So it's more systematic. But I don't think it's not analogous to our fractional banking system.
So is it caused by the time lag between different actions and before action one is completed, there's enough stuff can happen that it pushes things? It's like a bathtub filling up and draining at the same time, but sometimes it overfills?
One thing to
struggling with
look
that
at
analogy.
in regards to that is like put open interest and call open interest. And those essentially just measure like how many times in a day those change hands. If you're wanted to look more into like how those shorts are moving.
Jeff, dovetailing.
I mean,
with,
technically, every time there's an options move, it's like you're borrowing shares. The broker is, and it's just I don't know if it's due to the time lag, but I do think it has to do with the clunky system.
I don't know if it's time lag. I don't know if it's clunky system, but it shouldn't be allowed. It doesn't make any logic sense.
Yeah, we all agree on that.
It's used as a tool to really, for people that really want to drive down stock. Like there was 143% short interest on Gamestop when the stop was like $5. They drove, like the Wall Street hedge funds drove that company to extinction. That's like anti-capitalism right there. They made a decision to coordinate attack a stock through multiple hedge funds in order to drive the company into non-existence, essentially, right? And so this comes on a regulatory part. Another part, like just for example, you kind of asked why stuff like this actually exists. There's a lot of things in the system that's built that shouldn't be there, but it favors one particular group over the other. Like, take a great example, like overdraft fees, never paused during COVID. Again, U.S. banks generated $11 billion last year in overdraft fees alone.
So,
In
question.
Jeff's point-
So my understanding is when you borrow a stock, basically when you short a stock, you have to pay a daily rate during the time that you're in that position. Is that right?
Generally, yes. So that's how a lot of brokers make a lot of money. So, when you open an account with these brokers, you keep your stock in there, but a lot of times they automatically opt you into allowing your stock to be shorted by others. Especially if you have a margin account, if you have a cash account, it's not allowed. So it's like they make money from your stock holdings without you knowing, and some of them will be nice enough to share a percentage of that with you, and the vast majority of them do not.
Yeah,
so
that's
there's a counterintuitive, right? It's kind of fucked up. They're like basically allowing other people to bet against the very stock that you own.
That's why this has been such a bullish thing. I think that's why the entire Bitcoin community is like, fuck yeah, high-fiving all these guys, because this has made such a bullish, and just talking about the fact that like there's 138% of I guess overselling on this, and the reality of it is like this is such a bullish case for Bitcoin in a way maybe Bitcoiners couldn't have imagined making themselves. Like that's part of why I'm enjoying this so much. I'm gonna try to, by the way, Jeff, follow me, because when I leave here, I'm gonna clean up my research on these clearinghouses and how the system works. I generally agree. I don't think it's just like a TAM-like thing, but I do think there are systematic ways to why we got here, and I think it's not necessarily like able to be clear, like solved in the way that we rerun. But I'll do some more homework so I can make a more cogent explanation of that. I promise.
Can you expand the TAM-like thing, John?
They I said it surprises me. I think Bitcoin, is a big thing, and this is what came up late. But what surprises me is you have the Nasdaq guys saying they might halt trading. Like if you guys recall, I know a lot of people are old in this. If you recall 2010 in the flash crash, they never halted trading. Like I had margin positions in 2010. Wiped out everyone.
Exactly.
They weren't like, hey,
they got liquidated.
NYC wasn't like, NYC Nasdaq wasn't like they even consider halting trading, but you have to consider halting trading for one stock or a few stocks because of this.
This idea that mimetic warfare is force majeure to me is just, I think, absolutely crazy. But it's the other kind of thing that is amazing me, and I tweeted about this yesterday. It's like, wow, if you happen to be pissed at GameStop for manipulating the market, just like wait till you find out what your U.S. government does every day, and it's just like, and then we see 24 hours later where you basically have the aristocracy shutting down exchanges, letting their homeboys sell their shit, and basically one-siding the market and crushing retail investors that, whether or not you agree with them or not, you can certainly disagree with the counteraction that was taken by parties like Robinhood and otherwise, and fuck those guys.
Richard, the point that you made with regards to the flash crash was literally just made by the Winklevoss twins on CNBC. And the anchors actually were trying to refute it. They didn't know how to deal with it because he was literally talking about basically a shift away from the institutional structures and moving towards a decentralized exchange. And he was saying that this never ever happens to these the hedge funds. So why are they actually throttling retail investors from being able to do this?
Yeah, what really got to me is when exchanges started delisting GameStop. And Schwab, TD Ameritrade, they all delisted AMC, GameStop, Nokia, And what essentially happened is it stopped retail traders from buying this stuff up. So the people who had short positions from yesterday are minting money today. And if you look at the short interest, right before, like right when it updated last night, it was back up to 120%. So clearly there was more short interest from Wall Street. And when the exchanges delisted today, it was perfect. It literally just lined up for them. It's unbelievable.
So on that point, exactly. So what they allowed is they allowed people to retail exit, so you can only sell. And if you guys, I have a screenshot, which I posted somewhere. You should look at the order books. It's insanity to me. So there is very little on the sell side, very small amount, extremely small amount on the buy side. But the sell side, you could tell, was more institutions. They just crushed the prices because there was no volume on the buy side. There's nobody could really set up buy orders. None of the retail could, and so they just entered a larger short position or sold a bunch of shares, crushed the price, caused retail to panic, and as retail panic, which they always do on Robinhood, they're selling the shares with one click of a button, they're all scooping up the shares. This is exactly the play. But that manipulation play, this the fine for this will be, slap on the wrist even if they get it. No jail time, nothing.
Yep.
Yeah,
it was
why is
literally
that not
a
illegal?
forced sell. It was a forced sell from these exchanges. They only let you sell the stocks, which essentially made the short positions even stronger. It's unbelievable.
So what does this mean next,
thing I
though?
want
Let me
to
ask
know
you this.
about-
We all kind of agree on what's happened, and I don't mean to shift the conversation, but I'd love to get some takes on it while we have a bunch of brilliant people in the room. Dude, we all agree, this is crazy, right? You got, people on the right and left of the screens, on the same page here, right? So, it's almost impossible to get these people on the same page. What does this mean next? What happens next? If you're part of the aristocracy, you're part of, Suits and Golden Ivory Tower, what are you doing? And then if you're us, what should you be doing? And what does this mean next? This is where I'm unclear, and I'd love to kind of understand. Is this a blip on the radar, or is this going to change things meaningfully?
John,
is this a small
great
rebellion,
question.
or did it get
And I want
crushed?
people to-
This is what I'm starting to try to figure out, and I can't make sense of it on some level.
John, what a great question. I'm going to have people noodle on that. And then while people are noodling on that, I want to circle back to Drew's point with doing his, he didn't say audit, but his pattern recognition. So while we're thinking about John's question, Drew, can you expand on your investigation, along with Richard, if you want to chime in too, with doing your guys' pattern recognition, so that way the new people in the room who eventually want to ask a question, raise a hand. And by the way, a lot of this content is pure genius, and I thought I knew a lot of this stuff because I've got my little ARB game, but I've probably taken more notes than the entire audience as the speaker. So Drew.
I wanted to know one thing, though, because we're all trashing Robinhood and these exchanges, right? But it's kind of forced on them by the clearinghouse, which is Apex. Apex is basically the responsible party. They clear for all of these transactions. So M1 Finance, Webull, Robinhood, all of them use Apex Clearing, which is part of Peak 6, Dallas-based company. So that's the company that should get really sued because they made the call and limited these exchanges from clearing transactions on certain stocks. And that's basically all retail traders. So all these apps, they're using Apex as their clearinghouse, while some of the others, like Fidelity, they do self-clearing, E-Trade, and Charles Schwab, they do self-clearing. But all of these retail ones are actually using one, basically, back-end system.
Hey, thank you for that. Can we go back to John's question for Richard and Drew to chime in?
Yeah, so with the after effects, right? Nothing. It's going to have a memory of a goldfish. 6 months later, it's all be forgotten. Robinhood, took a hit pretty sizable. I think a sizable hit during the Tesla debacle to an extent. And then now, the most popular app, trading app. So nothing's really going to change. There's a small rebellion. Hopefully it carries on to the other ones, but it'll be forgotten. But I think these things come in waves. So maybe another wave of this, maybe a few years down the line, 2, 3, 4 years. Each wave is going to get subsequently larger and larger and larger. And so that's kind of, I think, the kind of result, because the previous waves were much smaller. Like I think last time the Tesla wave was probably sub 1 million subs on less than 1 million subs, 700,000 subs on Wall Street Bets. Previous to that was 200,000. So you kind of see it the AMD days were about 250,000 subs on Wall Street Bets when AMD was really popular. So, the next waves are going to get larger and larger. So you're going to start seeing these. At least the next few will be bigger.
Hey, Drew,
Yeah,
do you want
sorry,
to jump
Larry, I
in?
was in a class, but just to add on to this, I mean, John, you're asking what is the end game? Well, my perceived end game was that Main Street was always going to lose this because ultimately these hedge funds have access to free capital at this point, right? With interest rates this low, people are willing to throw as much money to keep these hedge funds afloat. We are essentially keeping zombie corporations afloat. And so at the end of the day, regardless of how much buying came from retail, there is no way they're going to muster up enough volume to keep this up, right? They're only going to bleed for so long. And ultimately what's happened here is that the SEC and the Federal Reserve are like, oh, we're looking into this, and now exchanges are starting to delist. People are realizing that censorship is becoming a real